So I was trying to think how I could help my friends, right? How can I help these people? And the best way I figured out how to do that was to, hey, I'm going to invest in deals anyway. Why don't I bring you alongside of me? I can kind of give you the basics up front, give you some recommendations and resources on how to get educated. And then I'm sussing out deals. I'm, underwriting deals. If it works for me, I can pass it along and you can get involved as well. I think there's something to be said about getting involved yourself before you go start to raise capital, right? I think a lot of people hear this myth about you just find a deal and you can go raise capital.
Hello, you're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I'm your host, Brandon Elliott. Today, we have a special guest coming out of the California area, same side as me, the West Coast.
West Coast?
West Coast, baby. So this guy is super awesome. You guys are going to love his vibe just like everybody else around does. And he's in the multifamily scene right now. He's done the smaller aspect as well. A man of many traits, which is really cool. You're going to be able to hear a little bit more background of who the heck this guy is, but you guys are definitely going to love it listening to this podcast. Tonight, we're going to be talking about how to really deal with investors and scaling your business to get to that next level. We see a lot of people out there that are struggling with doing exactly this, like how to talk to investors, how to present to them, how to be able to raise money and make yourself look and walk and talk the talk to be able to really get that initial capital needed to be able to complete your transactions, to complete your deals. So this guy is awesome, and he's going to be able to tell you exactly how he's done it in the past. So Chris Collins, what's up, brother? How you doing?
I'm doing incredible. Coming at you live from Los Angeles, man. Great to be on here. Thanks for that incredible intro. I try to just do a lot, but at the same time, I try and do less. My life keeps getting busier and busier, and I try and keep cutting things out and just stay super laser focused. So maybe it seems like I'm doing a lot in my life, but I'm actually trying to
laser it in more.
Yeah, exactly.
Okay. So for anybody out there that doesn't know exactly who you are, do you mind just diving into all the crazy different things that you are a part of and what you're doing?
Sure. Well, first of all, I'm a husband and a father, and that kind of drives a lot of what I do in my life, why I'm so busy, I guess. I'm a real estate multifamily syndicator, raise capital and buy apartments with investors. I'm also a television editor by trade. So my day job that I'm still working, I work in unscripted television. I do shows like Shark Week, and I did Duck Dynasty, America's Next Top Model. So I'm an editor, which I've been doing for 15, 16 years or so. And then I'm also a touring drummer. I play in a Blink-182 tribute band, which is pretty ridiculous. And so we tour all over the country and kind of out once a month with them. Just got back from Vegas, and then a couple weeks I'm flying out to New Orleans and Florida. So that's like everything. It's a lot, but at the same time, it's kind of, I try to, anything outside of that, I don't know. I mess with credit card hacks. I travel around a lot, and I eat a lot of tacos, and I drink a lot of boba. That's what I got.
That's what I got. That's awesome. I think how we originally met, we were at the Rod Cleef's event in Denver.
Yeah.
We were talking multifamily in that space, and out of nowhere, we started connecting and talking about credit. So that was really cool. We connected on that. I think it's awesome just to see how many different things you are doing. Like, you're in a band, which is sick. I didn't even know it was Blink-182 tribute. That's super sick. I love that. And then also you're making TV shows on the side here. Well, I guess a full time, right?
Everything I do is full time. That's maybe the biggest problem. I'm not very good at doing things halfway. I'm not very good at giving a little bit to something. I try and be excellent at everything I do, and for better or worse. But yeah, so full-time television, you can't really do real estate part-time and do it well. So I'm trying to set up an empire and a giant business. I'm not trying to just have one or two little houses here and there. And I'm trying to do something huge. So that takes a lot of time and effort. I'm also trying to be the best freaking husband and father out there. You know, I want to be an example to my son. I want to be an example husband. So, yeah.
Dude, I love it. Your heart's in the right place. That's super cool.
Thanks, brother. Appreciate it.
Dude, so let's talk about your real estate experience. When did you get started, and what kind of drove you in the path of real estate?
So I've always been invested in the stock market. I've owned businesses, and I was basically massing piles of cash. I was just making money, saving money, investing in the stock market, watching it grow into piles, watching it shrink in piles, grow, shrink, depending on how the market's doing.
Sure.
And I wasn't really feeling that so much anymore. And then
it's like a good way to get a heart attack. It's like it gets you super excited, and then it's like, whoa, what the hell happened?
Yeah, exactly. And so when we got pregnant with my son, who's now 4, so it's only been about really 5 years at this point that I've been diving into real estate, I decided I need to figure out a way to get streams of income, not piles of cash. I want streams of income. My day job in television has no long-term anything. It has no retirement plan. There's no health benefits. There's no guarantee of work. It's all freelance. So if I'm working, I get paid. If I'm not, I don't. If I decide to stop working in 5 years, that just cuts off the flow of money. A lot of jobs, out there have these long-term 401ks, and they'll match, and they do all these kinds of things that help you kind of transition into a later period of life. And I was trying to figure out, how do I not just work until I die? I know people who are in their late 50s and they're in television, and they're still just grinding it out every day with no savings, because now their money's going out to pay for college for their kids, or they bought a new car or whatever. So I realized I have to have something set up long-term where if I stop working, money still comes in. And that for me was real estate. So I started learning real estate at a feverish pace. I basically devoted every single minute of my time when I wasn't at my job, quote unquote, to my new job in real estate. So I was listening to podcasts, I was reading books. And then really what I spent a lot of time doing was having personal meetings with people. I would schedule coffees with people before work. So I'd drive to work, meet someone for coffee. I'd be listening to a podcast on the way. I'd meet with them. I'd try and stay real humble and just kind of ask, hey, I'm trying to get into real estate. What can you teach me? That kind of a thing. So that kind of got me into, I was going to start out with single families. I was going to do turnkey rentals and just start buying those. I thought that was going to be too slow eventually. So I started getting into multifamily and learned the syndication model. And so that's kind of been the transition. So I needed something for long term, and I wanted streams of income. And that's where real estate was born for me.
Okay. Did anybody help you out along the way, or kind of give you that path? Like, did you have anybody in your family, friends, any type of influence that kind of helped direct this new direction?
I met a lot of friends along the way, but no one in my family really has invested in real estate. My dad, I would give him some credit. Definitely. He owns a company. He's a member at a country club in Newport Beach. Right. And he would drop from time to time as I got older, and we would talk some finance stuff here and there. He would drop from time to time, some of my friends, they own apartment buildings and they're just at the golf course every day. They're doing something right. And that was kind of it. He was always encouraging of when I said I was going to get into real estate, but I think he was also cautious because I think a lot of people get burned in real estate and don't have time to learn it. So other than that, though, it's been kind of me trailblazing. But man, I can't even count how many people have helped me along the way. I have countless hours that I would love to pay back to people who have just been so gracious with their time that should never, I should not be on the phone with the vice president of Old Capital Lending in Texas, right? But he'll give me an hour of his time when I was just starting out. I had no idea what commercial lending was about. And, his response should have been something like, go read a book. But instead, he took all his time. There's so many people that have done that in my life.
Yeah, that's huge. At the end of the day, I feel like we all do need some kind of guidance, and it's awesome because even though you might have not been looking for it, but as you start going down that path and the right people just start falling into your life and giving some of their time a day away is super powerful.
Yeah. And I think you need to be intentional. I was pretty intentional, right? If I was talking to a broker in Texas, I would let him know, hey, I'm in California. If you know anyone out here, actually, you should call my buddy Rob. You should call Rob. Here's his number. He's in Venice. Go connect with him. So then I'd sit down with Rob and say, hey, you don't know me, but your buddy referred me to you. If you have an hour, I'd love to just kind of pick your brain. And people are generally pretty, especially in the real estate circle, people are very abundance mindset.
Yeah.
And they will help you out. And that's always my first recommendation to people. It's like, yes, read the books. Yes, listen to podcasts, but get out there and talk to people. And now I do that once or twice a week. I'm on the phone with people that are kind of where I was before, where I'm just trying to give them some of my time because paying that forward, people did that with me. So happy to help anytime I can.
Yeah, no, I love that. And I love how you mentioned being intentional, because when you're building relationships, because at the end of the day, like real estate is such a relationship built business, you 100% need to make those relationships, but be very intentional with what your goals are. So you can let people know exactly what you're looking for and have them keep an eye out for you. And then they naturally start, the gears start turning, and then they can figure out how they can add value to you back, which is pretty cool.
Yeah.
So basically you start into real estate, you're doing multifamily now, and you're raising a decent amount of money on a regular basis for some deals. So I guess when you started jumping into the multifamily scene, you realized that you wanted to raise money to get into these other deals, or like, how did you figure out the position that you wanted to be a part of?
Basically what happened is like I said, I work in the entertainment industry, and people around me started kind of hearing what I was doing, right? And they started hearing, oh, you're doing real estate. And then people would find out, oh, Chris is doing, because I was doing it a little bit bigger. I wasn't just I didn't just buy one house. I was buying multiple houses and investing in apartments across the country. And, well, what the heck is this? People have no clue what this is. So I had a lot of people come up and say, hey man, can you teach me this stuff? Can you show me what you're doing? And, my response was something like, man, I would love to, but this is like years and years of learning at this point.
Yep.
Every day spending time. I can't just teach you this over lunch. So I was trying to think how I could help my friends, right? How can I help these people? And the best way I figured out how to do that was to, hey, I'm going to invest in deals anyway. Why don't I bring you alongside of me? I can kind of give you the basics up front, give you some recommendations and resources on how to get educated. And then I'm sussing out deals. I'm, underwriting deals. If it works for me, I can pass it along and you can get involved as well. So then I was trying to figure out, how do I make that into more of a business, right? Because a big part of multifamily and syndications is you need to raise money. You have to have money to buy a deal. So like, this is kind of the honest behind the scenes, what happened in my brain. First it went, oh man, I could use all my friends' money and then I could buy stuff for free and then I make a bunch of money and this is awesome. Right?
I love that.
And then what happened is I sat at home, and my friend and business partner, Reed Goosens, who has another great podcast, great investor. He has a lot of property out in Texas. And he challenged me to really kind of think about the business that I was doing. What's my brand? What am I trying to accomplish? And really think through a business plan, not just this isolated kind of one track. How do I make money?
Yeah.
And it was great. So I spent about a week thinking, what do I want to do with this company, right? And I think what I'd realized is that I was spending so much time just focused on my money and focusing on me and how do I make money? How do I make money? And I've been doing that for years at this point, right? And 20 years before that, doing investing in Wall Street. And it's just, money was becoming this big focus. And I didn't want that to be the legacy, right? Of like, oh, Chris got rich and Chris made a lot of money.
Yeah.
So I really took a hard stance and I shifted my entire focus outward, right? Which is it's something I learned from, it's Robert Kiyosaki said, like, give what you want to receive, right? If you want love, give love. If you want hugs, give love, give hugs. If you want money, give away money. So for me, it was like, well, if I can just focus on helping people, I'll be fine, right? If I can focus my energy on educating people, getting other friends involved in deals, getting them in solid investments and focusing my time outward, look, I'm going to be fine. Like, I'm doing this investing anyway. I have a lot of money involved in it. It's my sole focus right now and investing. So I'm going to be fine. But if I can just shift that, then I don't have this constant me selfish mentality and it's not so money focused for me. And it's really about helping people. And that's where I shifted into, okay, now I can really help investors with a truly like outwardly focused mind. And it's been an incredible shift for me because, constantly having lunches with people and dinners and meetings. And people ask me all the time, like, well, what's in this for you? I'm like, I mean, look, if you don't invest in me, I don't care. As long as you're doing something and moving forward, I'm happy, right? Of course, it's great if you do an investment with me and we buy a property together, but if it doesn't fit, that's fine. As long as I can impart some motivation and wisdom to you to go invest in real estate, I'm happy, right? So I don't know, I don't know if that's exactly what you're asking, but.
No, it is. I can relate because when I originally started, the main issue in the house growing up was money. Okay. So I always thought, like, if I had a bunch of money, if we won the lottery or, all these other things regarding money, then I would be set. Everything else would be good and it would be like a domino effect. Chasing the whole dollar can put you down the wrong path. So it's just that mind shift of switching it around and seeing how you can serve other people and make it a win-win situation, because you are already doing real estate. Like, you're already going to become successful in what you're doing. So Sure. That's super powerful. I love that.
Man, and that's what's been incredible. And that's why I've really enjoyed talking to you before. I mean, I feel like having that mentality and having that others focus, I don't want to get too weird about it, but it makes you a good person, right? Like, it's such a more positive way to live life. And it's not it doesn't have that selfish kind of
feel to it, right? Yeah. Of like, what's for me? Yeah,
exactly.
Yeah.
I mean, you hear the term more money, more problems. And I know plenty of rich people who they don't seem to have the most happy life. So that can't be it,
No, I love that. Okay, so once you switched up that mindset and you started realizing, all right, I want to serve these other people. I want to add value to them. I want to be able to educate them on real estate so then they can actually put their money to work or do whatever. If they get educated on it, then I'm confident that they're going to see whatever the hell I saw and became so passionate about it. And it's a safe, lucrative way to be able to make your money work hard for you. So as you start educating these guys, how are you setting these meetings? Like, how does it look like in a nutshell, I guess?
Well, I'll give you kind of the path I took as I learned how to speak with investors, right? So
initially, maybe it's a little different from when you originally got started in comparison to what you're doing now.
Night and day different. Initially, I started meeting with investors, quote unquote, because people found out what I was doing and like, hey, can we grab lunch and you can tell me what you're doing? And I'm like, sure, why not? Let me tell you about it. And we'd have a 2-hour conversation where I'm talking about start to finish, why real estate, how to invest in real estate, all the different avenues of real estate, how multifamily works. And I was getting into these deep conversations and the person's eyes would glaze over in about 15 minutes, but I was too in my head to realize it, right? I'm just talking at them, just talking into their ear, and they're just kind of eating their food and like, okay, is this lunch over yet, right? And I'm sure they probably didn't think that way, but I think looking back on it, it was a lot, right?
Yeah.
I had quite a few of those. I realized I needed to set up investor meetings more intentionally. So what I did is if someone asked me, hey, can we talk about real estate? I would go, okay, definitely. Let's set up a time. So then I know when we go to have this meeting, we're going to talk about real estate. We're not going to cover the first half hour of most chit chat lunches, which is catching up on the family, yada, yada. And then we'll get into real estate. Well, now we've been hanging out for half an hour. I'm at lunch, like it's only another hour and a half. So I started setting up meetings very intentionally. And what I did that I don't know if, I think most people need to learn this is I freaking humbled myself and I just told the first couple people after we had these meetings, after we were finished, I go, hey, do you mind if I shoot you an email and ask you some questions about our meeting afterwards, right? So for me, it was kind of like showing my hand a little bit and going, I'm still new to this, which makes me look like kind of a newbie, which sucks for me, but at the same time, like it's a necessary part of it if you're going to learn.
Yep.
So I would ask the first couple people, I'm like, how did that meeting go for you? How was it as an investor? And the response I got was something like, look, you're treating me like I'm a little more of an active investor. You're treating me like I'm trying to know everything about real estate. But look, I'm just trying to be a passive investor. You're clearly the expert. Like, I get that. I don't need to know an hour and a half worth of deep dive into real estate. I just need to know enough where I feel comfortable. I was like, oh man, so it was a huge shift for me to realize that I need to be talking to investors what they want to know about, right? Not just me lecturing. Like, that's not what an investor meeting should be about. So I started having meetings where I would kind of start I would ask the investor, hey, sure, let's have a meeting, but I want you to bring 5 or 10 questions to the meeting that you want answered, right?
Yeah.
So it would usually go something like this. Hey, Chris, can we talk about real estate? And I'd say, yes, why don't you go to my website, read over all the materials, come up with 5 or 10 questions, and let's get together and talk about them. So then I had this whole period where I would sit for an hour and a half meeting and go over every single question, right? And it was still too much. Like, that's way too much for one meeting. But I didn't know that. I'm just learning that. I'm putting in, like, basically putting in the reps, like learning how to have investor meetings. So then the next phase was I would take their 10 questions and I would pare it down to 5 questions. So the next kind of phase of meeting with investors was, okay, I'd do the same thing. Look at my website, come up with 10 questions. Then when we'd sit down, I'd take 5 minutes before we even talk, and I'd just look it over. I'd look at the 10 questions. And I'd go, okay, let's focus on these 5. Is that okay with you? And if you feel like you want to keep going, we can keep going. But this will probably be a solid 40 minutes of material that you're just going to be inundated with. And that was usually okay with people. So that went pretty well for a while, actually. And I was able to just tone down what they're trying to get out of one meeting. And then it would set me up for a second meeting with them, right? Like, there's always room for more meetings. We can have another phone call. We can do 2 of their questions for all I care, as long as they're happy. So that was kind of the next evolution of meeting with investors. And then the third, I guess where I'm at now, when I meet with investors, it's really a little bit more organic. I don't have them necessarily bring questions. If they want to bring questions, that's great, but I don't necessarily prompt that.
Yeah.
I feel like, I guess at this point, I'm pretty experienced at how I have these conversations. So now it's more about, let's just have a casual conversation, but I'm going to be asking them more questions. I'm not going to be talking the whole time and lecturing. By asking questions, I get to then answer what they're actually looking for.
Yeah.
What do you care about as an investor? What does a good investment look like to you? What have you been doing in the past? So that's where I'm at now. Now I ask more questions and I answer what I need to, but I'm really trying to get a sense of them as an investor and how can I really serve them. So it's been a long evolution. It's been a lot of reps put in, right? Just failing my way through it. I have plenty of meetings where I get home and I tell my wife, I'm like, man, that was an awful meeting. It was terrible, but you know.
So now you're at the point, I mean, before you really started off and people were probably sold within the first few minutes of talking with you and, like, you know, they're confident in who you are, and then you just kept talking. So you kind of talked your way out of the deal.
Oh man.
Yes. But then
maybe not out of the deal, but it was like, I could have shut up about 10 minutes in and gotten the same amount accomplished.
Yeah, exactly. And then after that, you started getting people to come up with a little bit more centered and direct on what you're looking for to answer their questions. Prepare them, tell them 5-10 questions. That still was going a little too long. After that, now you're to the point of, are you even telling them, like, hey, if you have any questions, bring it? Or you're just keeping it pretty organic and, you know, letting them.
Yeah, I still kind of say, hey, why don't you look it over and have some questions, but I don't do it as official. It's a little bit more organic. If you were to look on my website and read over my blog, you'd get a lot of your answers that you needed, a lot of your questions answered. Not many people spend the time to do that though, right? They're really just, investors are looking to get to know you a bit, kind of hear about your deals you've done, hear what you're looking to do in the future. So it's a little bit more organic. I think I've done this a lot, enough to be comfortable to just jump into any conversation and turn it into an investor meeting that's productive for them mostly, right?
Sure. Let's talk about that for a second though too, because you just mentioned you have the blogs, you have email sequences that, like, you're sending out that has plenty of information out there that any questions that an investor that wants to invest with you most likely could actually get answered on their own. But like you just said, 9 times out of 10, they're actually not going to read through any of that stuff, but you still do it. Now, you still do it for what reason? Do you believe it adds up for the personal brand, for that whole know, like, and trust? Kind of gives you, like, the authority figure, like, well, if he's writing all this stuff, somebody else out there is probably reading it or listening to it. You know, it's probably good stuff. Maybe we should invest with this guy.
I think that's a lot of it. Yeah. What did you say? Know, like, and trust, right? Like, so you clearly, you think a lot about branding, and that's, I guess if I was going to look at it, like, you know, it's maybe 30% because I think they're actually going to read it, and 70% just to have something in their inbox going, whoa, Chris is doing this. Here's another thing from Chris. Chris is because I'm kind of, you know, in my sphere of influence in the entertainment industry, people don't know me as the real estate guy. Yeah. And now they do, but they only do because I've been sending them material on a constant basis, and they're seeing me post up videos on Facebook that I'm, out walking property with a broker in Phoenix, or I'm in San Antonio looking at another property. Like, they see that, and it's so much more than a passing conversation. Like, oh yeah, Chris said he was thinking about doing real estate, whatever that means. Like, this is like, oh, it's showing that this is an actual business. This is something that's serious. So it is definitely exactly as you said. It's a lot of it is just to keep my presence out there, and it's tough because there's a part of it where you feel like you're bragging and going, look, and I'm doing this and this, but really it's just saying, hey, just so you know, I'm going to be doing this, and the whole goal of this is that I'm doing all this extra work so that you guys can invest passively and not have to do all this work. Like, I'm not here doing the work anyway. You might as well jump on board and get some passive income off of it while I do all the work.
Exactly. I mean, just like you said, it's like you're going to be doing this anyway. So it's been lucrative for you. It's something that you believe in. So if other people want to make the same choices, then you're just giving them the platform to be able to do it. And you never know who you can actually help out or impact or change their life by just getting yourself out there. So it's an awesome, great reminder just to pop up in their news feed or their email and see like, hey, another email from Chris. He's doing it again. So it's a great reminder just to put another seed of thought in their mind. I love it.
And another thing I do is, like, let's say I had an article I wrote 3 years ago, and someone asked this question in an email. I can go, oh, here's a quick blurb, but by the way, here's a blog that I wrote about it. What I don't know, and I feel like maybe you could tell me what you think. Can I repost those things now? Like, hey, here's a series of articles I wrote 3 years ago and posted on Facebook today, because people haven't seen it because maybe that went out to my email list 3 years ago, but not today, maybe I should be reposting stuff.
Sure. Yeah. I mean, if it's relevant, then always. And if there's bits and pieces that aren't relevant, then I would just either go back through it and kind of cross those out and say this once was, but not anymore, or just let them know up front, like, half of this might be relevant. This was written a couple years ago.
Gotcha.
But always repurpose. I love it. So the thought-provoking questions that you're kind of exercising one form or another, naturally pretty organic, but is there any type of questions that the listeners could actually take advantage of and kind of prepare themselves to be able to ask the potential investor to kind of set them up for success? Yeah.
So what I'm trying to do is understand their investment history, their investment goals, and what they understand already about real estate.
Yeah.
So my first question is usually, hey, what kind of investing have you done in general? Like stocks, bonds, have you bought businesses? Do you own franchises? Have you ever owned real estate? Have you owned your personal house? So that question alone will get me a sense of, if this person has literally never invested in anything before, then I have a little bit more, let's start at square one, right? If they already have done a ton of stocks, well, what kind of stock investing have you done? Has it been a managed account, or are you personally trading? Do you like really risky stocks? Do you understand why your stocks are doing what they're doing, right? So that gives me a sense of kind of where they are. So it's what kind of investing have you done in the past? And then really I want to know kind of their understanding about real estate.
Sorry to cut you off, but is this to also kind of get a better understanding of if they're sophisticated or accredited?
Accredited is most people who are accredited know they are.
Yeah. You'll be able to tell when they step into the room, right?
Well, I don't know. They'll usually know. I feel like most people who make that much money are doing something already to be investing in. So, but it's definitely to gauge some of their sophistication. If someone comes in and they're just square one, I don't want to put them in an investment right away. That's not right by the SEC. That's not right by me as a fiduciary and being responsible for their capital. So I need to know where they're at. So the next question is usually, what do you know about real estate right now? What kind of, describe to me what a real estate investment is. And some people will just say, well, you buy a house and then 5 years later you sell it. That's an investment. Okay. If that's your understanding, do you know anything about flipping, wholesaling, and multifamily? Like, just trying to get a gauge of where they are. And a lot of times they don't know a lot. And so then I spend some time explaining quickly the differences between the different kinds of real estate investing, but I really focus mostly on multifamily because that's what I do and that's what they know that I do, right?
Mm-hmm.
And then really a big question I ask them is like, what does a ideal passive investment look like for you? Because some people don't know, right? Some people don't have a set, they like what kind of returns they want. They just know they want some kind of cash flow and they don't want to worry about it.
Yeah.
Right? Okay, cool. That's great. I can provide that. If some people are like, well, I need X percent return. I want it to be in this many years and I want these kind of reports. Cool. They're very demanding. And I know that they are going to want, that will work with maybe a certain team and a certain kind of investment, or maybe they don't really know what they want. And then I can offer them kind of couple differences. Okay, there's some deals where we'll buy a property and you won't get cash flow for 2 years, but you're going to double your money in 2 years and a big check at the end. Is that okay with you? Oh, I never thought about that. That'd be interesting. Okay, cool. Maybe that's an option for them. Hey, here's a deal where you get cash flow every quarter, but maybe the payout in the end isn't as big, but it's consistent. Yeah, that sounds good to me too. Okay, cool. Well, then starting to get an understanding of what they understand and what they're looking for, really.
Yeah. I think that's super crucial to really understand like what their end goals are, because at the end of the day, like you said originally, like most people are kind of set in their own ways and in the selfish manner of, well, what's in it for me?
Yeah.
So if you can come and switch it around on them and really be able to serve them and be able to educate them and pull it out of them of like, okay, well, this is what's in it for you. Depends on whatever your end goal is. Like, what do you truly want out of it?
Yeah, definitely. And I think because most people, some people just don't know. They just know they should be invested in something.
Yeah.
So then it's up to me to hopefully provide some education and let them know what the different kinds of investments could be, what it could look like, what's been my experience, maybe some of my failures and something that I've learned. And that it gives them a picture that maybe they didn't even understand was there. And then let's see, what else do I ask them? I mean, I try and ask, I'll usually ask them something like, so why are we having this meeting, right? Like, what do you know about me, and what do you want to know that you feel like you don't know, right?
Yeah.
And that kind of opens it up for them to feel comfortable to ask bigger questions, like, I don't know, what are returns like, and what happens if this deal goes bad? How do I get my money out? All those kinds of questions that investors ask that I've just been asked many times at this point and gone through the reps. So now I have good answers for most questions, but it's really about what are their questions. I don't want to give them answers for a bunch of stuff they don't care about, right? If I want to tell them about, I don't know, 1031 exchanges and stuff, if they don't care.
Yeah. How to use your IRA account to invest,
right.
A bunch of things if they don't have an IRA account.
Exactly. And then at some point, really, I got to, you get to the point of like, okay, well, if all this looks good, what kind of money would you be looking to invest? Like at some point you got to get to some numbers, but that's only going to be once they're comfortable. I mean, some investment meetings, I don't even ask that question. I don't even get to numbers with people because you can tell they're still just understanding the concepts. Let's not talk about 50 grand or 100 grand today. That's just going to overwhelm you and you're going to go home with this pressure of like, I need to invest 100 grand. Well, you don't need that pressure from me, like you probably have the pressure on yourself already.
So I feel like I probably do it a little bit backwards.
Okay.
And I don't raise like a ton amount. I like to leverage credit for the most part, like you're aware of. But for certain deals, we do raise money. And I like to ask what their end goals are. And then I ask what type of money and where is the money coming from that they want to invest with. Afterwards, that can help kind of guide me of what their goals are and how I could potentially be able to utilize it and structure the deal. And then afterwards, once I kind of get those structures, then I'll educate them on how that whole system works. Let's go over some basic questions that you probably get asked.
Sorry, really quickly, but do you feel like you ever scare people away if you ask them that like straight off the bat, or do they know that they're already going into that conversation, so that's fine with them?
Well, if I can tell that there's interest right there, and that they actually brought up the question or they asked about it or something, then I'll kind of dive into it that way. Well, what's your end goal? Like, what do you want to do with your money? And like, what are your plans? And then once I find that out, then I just have money on my IRA account. It's not making enough. I'm scared that it's going to drop or something. Or I have a bunch of money just sitting here in the bank and I used to have my husband take care of it. Now he passed away. I got to take care of it and I don't know what I'm doing with it. So, stuff like that, then I can figure out, well, what do you want on a monthly basis or a yearly basis? What kind of returns?
Cool.
So yeah, I guess they're all somewhat of like a little bit of a warm lead, because once they ask me the questions, then it's already kind of like a go.
Mm-hmm. Absolutely.
But let's talk about like some of the questions that you get on a regular basis, probably asked a million times now, that might be able to help some of the new listeners out there, I guess, kind of set up their talk or be able to answer very confidently to the potential investor.
What are some of the questions and how to get confidence? Look, I think there's something to be said about getting involved yourself before you go starting to raise capital, right? I think a lot of people hear this myth about you just find a deal and you can go raise capital. I'm like, well, sure. But if you've never done that before, if you've never been in a deal before, if you've never been the capital that someone else is raising, you're kind of at a disadvantage, and it's going to be a little bit tricky to build that trust up. It's going to be tricky to speak with confidence. It's going to be tricky to speak from experience.
Yeah.
And I think people see that. That being said, there's definitely a lot to be said about just being really educated so you can give a solid answer. But at the same time, I'm still in the infancy of my investing, right? I'm going to be investing for the next 40 years.
Yeah.
So I've only been doing this for, compared to a lot of people that I hang out with, I'm still way at the
in the game.
Absolutely.
Yes.
So I still can't speak from as much experience as someone else. I was not investing before the crash, right? And people go, well, during the crash, this, and this. I go, yeah, I walked through it with my condo I owned, but I did not have investment property, so I can't speak to that. And I have found, that admitting where you don't know something is just as powerful as admitting when you do know something, because I think people see that you're being genuine and they see that you're not trying to sell them on something. And that is one thing that my friends will tell you is that and my investors will tell you is I'm not trying to sell you something. Like, I want an investment that works for you. If you don't do it, no problem. I'm investing in it anyway, right?
Yeah.
Okay, so sorry, back to your question. What are some of the questions, right?
So a lot of people might ask, well, what if this thing goes upside down, and like, how can I get my money back? Or what about the market?
Yeah. So, okay. So that's like 4 different questions, but that's a good question. So how do I get my money out of this, right? Let's say I invest 50 grand. How do I get my money out?
Yeah.
And my response is basically, well, you can't. Like, this is an illiquid asset, right? I need you to understand that. And that should be based on my understanding of their investment goals, right? If they're looking to get in and out of something really quick, we don't even need to have a conversation about it investing in a syndication, because this is going to be a 3 to 7 year hold. I explained there is an instance where, in theory, if you need to get your $50,000 out, something happens in your family, we can try to sell your shares to someone else in the syndication. Like, that is a possibility. I've personally never had that happen. All my deals so far have been pretty good, except for one that I'm in. But that typically the answer is no. Can I get my money out? No, unfortunately you can't. If that doesn't make you happy and you're not comfortable with that, please don't invest in one of my deals.
Sure.
Let's see, what was the other question you brought up? Looking at risk and what happens, like, basically what can happen to my money in this deal. Everything goes perfect. Everything goes according to plan. Yay, it's rainbows and sunshine. Everybody's happy. So what about the opposite side? What happens if the deal doesn't go so well? And then I'm really explaining the idea behind real estate is that you actually have a hard asset, right? Your money is not going up and down with the idea of a company, like stocks, right? My Tesla stock is going up and down based on the impression that investors have of the company. Well, with a piece of real estate, I explained to them that this is actually a hard asset. Your money is in there getting returns based on rent that's coming in and expenses that are going out. Well, as long as our expenses are going out in a pretty controlled fashion, as long as we're doing a pretty solid business plan, the rents should come in. Now, we could have less returns than projected if the rents aren't as high as we could maybe get to. Maybe we're trying to get to $900 in rent and we only get everyone up to $850. Well, yeah, then we are getting lower returns than projected, but we're still getting returns, right? We're still getting money coming in. It's just not as much. So on my deals, we do a sensitivity analysis, which is basically stress testing.
Yep. Look,
what happens if we're 100% occupied and everything's great? This. Okay, cool. We're 14% cash return. Awesome. What happens if we're 70% occupied? What happens then? Ooh, well, then you're getting 1% return. I mean, that's still in the black.
You're still up.
Still in the black. And for a property to get that bad, either we're so far off on our underwriting and our business plan goes straight to hell, and the bank missed it in their underwriting. Like, all that has to happen, or there's some kind of disaster, right?
Yeah.
And if there's some kind of disaster, what I learned somewhere along the line that made me feel very comfortable is, well, look, if my money was in the stock market and there's a disaster, my money's going down in value. It's going into the red hugely. Well, what happens when the stock market goes down? Real estate will drop some, but my money's still a little bit in the black.
Yeah.
So I'd rather be a little bit in the black than really in the red.
Yeah, at the end of the day, you're talking about something that's a physical asset, something that you can see, feel. It's not something that stocks, like the owner decides to cheat and get caught, or all types of crazy things that the owner, the CEO, could do and fluctuate the stocks one day. That's totally out of your control. That's not going to be the case. You get a physical asset, which is night and day.
Yeah, and at the worst case scenario, we go sell the property and we maybe don't make all of our money back, or maybe you lose a little bit, or maybe you just make a smaller return than projected, but that's like worst case scenario.
Are you giving promissory notes out at all that, God forbid, you would owe that one way or the other?
No.
Okay.
I've never done that.
Okay. That's more on smaller deals. That's not syndications. You're working on bigger deals. Promissory notes would not be something that is required or requested when you're raising a couple $1 million in
right
revenue.
So, and then a lot of people want to know how the returns work, and they want to know how I'm getting paid. So I have to, a lot of times people don't understand what a preferred rate of return is or how an investor split works. And one thing I do is I always carry a pen in my pocket and I pick up the nearest napkin and I draw out a simple pie chart and I explain that there's a 70%, that's the limited partner, 30%, that's the general partner. So what I think is nice about that is it shows them, like, look, I can explain this to you on a napkin with a pen I just pulled out of my pocket. I don't need to pull out a advanced spreadsheet to explain this to you. And if you can't understand this on the back of a napkin, it might be too advanced, right? Yeah. And people feel comfortable with that. And that is, like, I don't know, I guess a little tip or trick for you is be able to explain this in a way that's very simple, that you can do it on the back of a napkin. And I think that's it puts people at ease that oh man, can I take that napkin? People will leave and can I bring that napkin? I'm like, of course, yeah.
Yeah, the napkin's yours.
Yeah, it's from you. Charge for the napkin.
Yeah. That's too funny. Really simplifying it, and I don't like the word of like dumbing it down, but third grade level, just make it very plain and simple. Something as easy as pulling out a pen from your pocket, or even borrowing one out of their shirt, and utilizing their napkin right in front of them is an awesome technique, just to be able to like show them how simple it is. And if it is overwhelming or complicated, or the questions keep on piling up, then maybe it's not the best fit at time. Maybe this relationship needs to just be built over time and educated a little bit more through some of your resources.
Absolutely. And also, honestly, that comes after 10 minutes or 15 minutes of asking them about their experience level before and what investments they've done. Some people, a napkin is not going to do it, right? They want to pull out your laptop, show me your returns, show me some charts. Like that works. Like I'll have a laptop with me and let's look at this last deal I'm working on. Let's look at the latest returns. But some people, they're not there and they don't care. Some people don't care about that, right? Like they just want to know that what do you estimate my check's going to be each quarter? What's the long-term plan here? And when are we going to sell the property? A big question that people often ask is like, why do you sell properties? Right? Why don't we just hold this long term? Right? So I explain in that instance, that actually comes up a lot, like, because they think people hear buy and hold, they want to own real estate long term. Why are we going to buy this apartment building and then sell it in 3 to 7 years?
Yeah.
So I usually explain how there's 2 reasons for that. One is that you're trying to capitalize on the largest amount of growth. If I'm taking this property, we're buying it where rents are at $700 and we're trying to get it to a place where the market rent's $900, that's the biggest amount of growth you're making, is from making it from $700 to $900. Well, after that, you're going to get from $900 to $910, $915, $920. The little rent growths are going to happen. So the biggest growth is that first chunk. If I could sell it right at that $900 mark and then start the process again with another property at $700 and get those up to $900, that's going to be the biggest way to grow my money. I feel like I'm young. I want to be in deals that are a little more aggressive and grow money quickly, rather than a deal where we get it to, we buy it at 700, we get to 775, and then we just kind of hold this thing long term, and we get the rent checks every month. That is nice, but it's the slower path. Yeah. And then the other thing I get to explain in that question is how commercial lending works. And commercial loans are not the same as residential loans. Like, they work on a shorter time frame.
Yep.
They could be a 5-year loan, a 10-year loan. And at that point, the loan is freaking due, So you got to sell that property or refinance it. And so it's a great question, because then I get to explain how that works. And people don't know that commercial lending is different than buying a house and you have a 30-year loan. So
yeah.
And back to square one, like, that all comes from me picking up the phone and calling commercial lenders and, hey, my name's Chris. I've never had a commercial loan. Can you explain to me how this works? And then just shutting my mouth and writing frantically pages of notes as they explain it. And then,
yeah. I mean, at the end of the day, like, from where you are today in comparison to where you were when you first initially, like, sat down at that table or had that conversation with other potential investors, I'm sure it is completely, like, a million times over, night and day.
Night and day. Absolutely.
And at the end of the day, like, you're not going to be perfect right in the beginning. You 100% just need to take action, and education is everything. So the repetition of actively doing it, but also doing your research, do your own due diligence, be confident, bring out the confidence as the more that you educate yourself. All the books you can get your hands on, podcasts, YouTube, picking up the phone, building these relationships. I think you dropped a bunch of gold nuggets when you were mentioning originally where you're screwing up, you're talking too much.
Way too much.
And when you're meeting people, when you're networking, I used to play a game with myself. A mentor actually told me to do this. When you're meeting somebody, ask the thought-provoking questions, but really play a game and see who can speak the least. And I was doing it with other people that knew I was playing the game, and they were trying to do the same thing. But it's really fun. And at the end of the day, when the other person's talking the most, you didn't say a damn word, they can walk away feeling the most fulfilled from just being heard, felt, accepted, and acknowledged. So that's huge right there. But also just acknowledging all the different personality types out there. Because when you're talking like a decent amount in the beginning, you might have been dealing with a personality type that's like, they're just like, let's go, let's do it. I got the money. Like, give me a little bit of confidence that you're not going to go like throw it in a ditch or something or screw around at a casino, and we're good to go.
Yeah, right. I mean, and it's really, I mean, it's kind of like, it's interesting because that is something that I've picked up along the way in networking events, right? And just going to meetups and hosting meetups and it's tricky being on podcasts, to be honest, because I've tried to learn and get away from of me just talking a lot. And being on a podcast, of course, you're supposed to freaking talk and help add some value here. But I want to ask more questions than I'm responding to. But there is a balance when you're meeting with investors. And the balance is where you need to, I want to ask them more questions so that I know about them. I want them to feel heard. So I want to shut my mouth and listen. But I also need to be able to spout off and show how trustworthy and how knowledgeable and how involved I am. So there's a balance that I'm still learning to this day, to be totally honest. It's not a perfect, I'm by far not perfect at this. And I'm still, I would love to hear this podcast from other people in my shoes that are meeting with investors on a daily basis and see what they do. And
of course,
take notes from them. And so.
Yeah. No, I love it. At the end of the day, I really do truly feel like it all surrounds around understanding other personality types out there. There's a million different platforms to be able to get educated on personality types, and the more you educate yourself on that and you really meet new people, understand like who your best friend, like what type of personality type that person is, or just family, friends, all these other individuals within your own surrounding, your own circle, to understand their personality types and what really triggers them and how they react to certain things. That is a great indication right from the start of how to present something to somebody and ask them the right questions.
Yeah. And ultimately, I mean, it really boils down to, you just have to get out there and do it and fail. I mean, I know people who are like, oh yeah, I'm going to start raising the capital after I get my deal. I'm like, you better start those conversations now, because when you go and ask your uncle for 100 G's and they've never heard you talk to them and you've never talked to anyone about it, guess what? You're going to fail through that conversation. And it's just, right? Start now. Start having those conversations, and that by when the time comes when someone goes, yeah, I got $250,000, I want to invest, you're prepared, you're ready to have that conversation, and you're not afraid of that conversation. You don't overspeak, you're asking more questions, all these things that we talked about.
Yeah.
So start now, get your reps in, and you're going to go out and raise a bunch of money.
Yeah, no, at the end of the day, you got to take action. It's funny. I got a quick story. Somebody that I'm coaching, as they got their first property within 30 days under contract, a screaming deal. And I've always taught people, like, get the deal first, lock it in. And if it's a screaming good deal, you'll be able to raise the money. And he was confident at first because he was like, damn, this is a really good deal. But it was his first time asking somebody for money. And that's where he went wrong, because he was coming from like the me approach instead of switching the mindset and realizing who has a bunch of money that's just sitting in a bank account, not earning anything, or gambling it with a stockbroker that's moving his money around for his own benefits.
Right. Yeah.
So unfortunately, when he went to raise that money, the confidence disappeared right away, and the lack of education, he wasn't able to deliver it to be able to get these individuals to actually invest with him. So I had to raise the money for him, but it's just like, it shows right there, like, confidence is everything, but you really do need to be educated first,
Yeah, sure. Yeah, absolutely. And not everyone's in the same spot, right? Like I said earlier, I think the good spot is to go and invest your own capital first, get involved, get knocked on the chin a couple times, have some successes. So now you have a little more speaking from experience. But not everyone has money to throw around and invest. So some people are still coming from scratch, and that's okay. But even then, even more, start having your conversations now. Get your reps in. That way, when you do find your screaming deal like your guy had, he's just having another conversation at that point. He's been building it up. He's been setting it up. I mean, a lot of I've been heavily influenced by quite a few different podcasters, but Michael Blanc's big on having your sample deal, right? Having a deal you can pull out. If I could find this deal, would you be interested? I don't have it yet. I haven't done it before, but this is how it would work. I can explain to you how this works. If I have that, would you be interested in investing? Well, yeah. Well, now they've set that up. So now when your guy goes and finds that screaming deal, now it's a real life deal, right? Hey, remember that deal I talked to you about 6 months ago? I got one. Are you in? Oh man, this guy really came through? Sure, yeah, let's do it. Now they're investing in your deal. Even though you haven't done a deal in the past, it's possible. But that's not going to happen so much like you experience if he's going to that person for the first time. I have a deal. You've never heard about it. You didn't know I was doing deals. Now I want to, 50 grand.
No,
conversation.
Yeah. I need money. Like, you want to give me money? It's a little nerve wracking and overwhelming or intimidating. Yeah. So, even if you're in that situation, you're working at Starbucks or whatever it is, like you don't have the capital currently. That's why I'm very big on it. You are as well, on the side of credit and how you can build up strong credit lines, be able to leverage that in the beginning. I've leveraged a ton of credit when it comes down to 0% interest, 18 months to purchase properties, and every single remodel has always been on credit. So it's super powerful. Man,
I'll have to do a whole nother podcast on that sometime. Then maybe I'll interview you on your podcast about your whole credit thing. Have you ever gone out and talked about your credit?
I have a little bit, but I've never been interviewed on my own. That would be pretty badass, actually.
Hey, man. All right, well, let's do that.
I love it.
Starting part 2 right now. Go. No,
Chris, man, I appreciate you so much. I feel like there's tons of value in here, and the listeners are definitely going to be able to have something that they can take action on, implement, and be able to get the success with raising money and be able to build up their business overall.
Thanks, Brian. I appreciate you having me. If you're looking for educational materials, your website's incredible. I mean, I went and checked it out. There's a lot of great podcasts on there. I hope your listeners if they're listening to this one, I hope they go and check out all the other ones. If they get a chance, they want to check out my site. My company is called Amity Cash Flow, AM as in Mary, AMITY cashflow.com. Welcome to check that out. Reach out. I'm sure Brandon will put some contact info there if you want but otherwise,
yeah. So however you like, I was going to ask, however people can reach out to you.
Yeah. My email is chris@amitycashflow.com. That's CHRIS at AMITY cashflow.com. Happy to talk anytime. I mean, genuinely, like if you're starting out from scratch, if you've been doing this for years, if you want to work together and partner up and teach me something, please.
Hell yeah.
But happy to help any way I can.
That's awesome, man. Well, you're such an awesome guy. You definitely have the heart in the right place, and I love that about you. So I appreciate you actually giving back your time right now. I know it's like getting dark on the one side of your cheek right now, so I appreciate you staying later and not rushing off to the family.
It's all good.
Yeah, you're the man. Appreciate you, brother. As always, guys, make sure you go check out iTunes and hit that subscribe button. Leave a review as well. Let me know what you guys think. You can check me out at BrandonElliottInvestments.com, Instagram, Brandon Elliott Investments, and then Facebook.com/Brandon Elliott REI. So till next time, this has been another episode of Ready, Set, Go Real Estate Investing. Stay blessed, guys.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.